Hello,
trade,
everybody.
desiring to trade, becoming interested in trading, and just getting invested, period, in the stock market. I just love the impact that you guys have all contributed, not only to the finance space, but to your own families. I tell you guys every day, I'm going to teach you a skill that can change your life. I'm going to teach you a skill that's going to allow you to leave the corporate plantation if you desire to. You ain't got to, but if you desire to. But more importantly, because of the way I teach you the game, you are going to be able to teach your kids, your grandkids, and your family how we do this. And when that happens, that's when the breakthrough really takes place. Okay, so that's what I'm most encouraged by more than anything else is about how many more people 5 years, 10 years from now that we will have reached because of the journey we all went on together. Okay. Speaking of the journey, guys, we got the 2026 100K challenge coming up, and I want you guys to get your A game ready and get locked, loaded, and ready to go and geared up for that this upcoming year. Okay. But matter of fact, man, I just had to say major salute for the impact you're making. And that's what I'm most happy with is the lives I've been able to touch, the people I've been able to meet, the one-on-one coaching calls I've been able to have with you guys, the text messages, the emails, the ups, the downs, the whole gamut that we have went through together on the journey. I genuinely love walking alongside you guys. I genuinely love teaching you a skill, but then more importantly, seeing you win when it's all said and done. Make sure you like this for me, guys. Make sure you share this for me, okay? Do those two things for me. And then, guys, what does it take to become a 6 or 7 figure trader? Okay, here's some nuggets for you. For those of you that are en route to becoming a 6 figure trader and a 7 figure trader, because the skill set is very, very similar. Guys, it's going to come down to patience and discipline, okay? Sometimes people think you need all of this fancy stuff, all of the indicators, all of the TV monitor, computer monitor screens to become a 6 and 7 figure trader. Guys, although those things can assist on the journey, those things are not required to become a 6 figure trader or a 7 figure trader. The thing you have to do more than anything else, find a strategy to work for you. Okay, number one, you have to find an asset that you want to trade. Not 10, but one no more than two, and stick to it. Okay. Number three, all right, you want to make sure you perfect whatever your trading strategy is. If you are a day trader, you want to perfect what you do well during a given day trade. If you are a swing trader, you want to stick to your rules for how you swing trade and how you maximize your profits. You want to, number four, manage your risks. When coach talk about managing your risk, I'm talking about using a stop loss. I'm talking about learning how to keep your losses small. I said it from the gate. Your $1 million is inside your losses. You got to learn how to lose before you can make 6 figures. You got to learn how to lose properly before you can make 7 figures. What does that mean, coach? Learning how to lose. Nobody in the game talks about learning how to lose. You need to quit making sure that you don't lose your whole entire account when you're trading and having to keep starting over at zero. You need to
Agree on that. All right. If you got any comments, drop those in YouTube. I don't always see them immediately, but I normally do. Let's talk about new egg. Okay. We've also got some dilution information over here. Okay. There we go. That's pretty big, right? Cool. Stop chewing on my tongue. You can probably hear that. There we go. There is one stock that I think, ticker symbol is NEGG, Newegg, is the best company to put $50 in before November 1st. Amazon earnings are coming out tomorrow. NEGG, Newegg, is a small e-commerce retailer. Some say they could become the next Amazon, the next Temu, the next Alibaba. Most importantly, they're at a very important price level. They have extreme moves up in short periods of time in the past. Literally just a few months ago, they moved up a lot. And I'll take a look at that in just a second. Hit that like button if you want to see these ideas. And let's jump into a breakdown on Newegg.
This is Sam Putnam.
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 So this is the chart, and this is the big move up I was talking about, from $3 to $120. Yes, you heard that correctly. And then here is the recent activity. Some volume coming in and then volume drying up. Volume drying up is good because when there's a lot of volume, oftentimes it can mean, well, there's selling happening. So it's good that it hasn't up much. It's only $60 right now. It's above this level that it's been at for all of September. You can see this stock is completely disconnected from the market as a whole. Well, makes sense. It was a penny stock. It is a penny stock still, I would say. So now the question is, by November 1st, is there an opportunity to get in here? And I think there is. I think Amazon earnings tomorrow is an interesting catalyst. I don't know 100% if it's going to make an effect on Newegg because this company is so small. So here's a little bit of news about what they are. They do have some partnerships with credit providers like Credit Key, and Affirm is another one that's really well known. Buy now, pay later credit providers. And this is the gain we were just looking at. They have over $1 billion of guidance for net sales, guiding over $1 billion with a net loss, okay? But Amazon took 15 years or more to become profitable. The fact that they have this much sales is impressive. And it has to be known, you know, just because it made this massive move up, it doesn't mean it's going to be able to do that again, but it does get a lot of eyes on it. And of course, if we look on a 5-year chart, you know, this company is known for crazy, crazy moves. Now, you can't really look at 2021 and say we're going to have another move like some of the moves in 2021. I mean, if you look at some other companies, Carvana, crazy move, did get back up there, but not every company is Carvana. And as we were seeing from earnings, Carvana earnings just came out and that stock is down. A lot of stocks are down right now. Meta earnings, big drop on CapEx, 15 billion of CapEx. And, you know, Google's great. Google's doing well. And we'll see what happens with Apple and Amazon tomorrow. But right now, the story is that basically the Mag 7 is riding on NVIDIA. And it's kind of, you know, a toss-up with Microsoft closing down so far as well after hours. We don't know if these companies that make up 30-40% of the stock market are going to be able to prop up the market and keep us on this historic bull market that's just in the last week gap up, and then green day, down a little with that 25 basis point expected sell the news rate cut on FOMC. But as we wait for the meat of earnings season to shake out, 20% of the S&P earnings are this week. You have to consider some smaller ideas, and I think Newegg is the best one to look at before November 1st, which is actually Saturday. So the last market day will be Friday the 31st. Could this take longer to materialize? It could. If we look back at this move, it did take a while to sort of gradually take off. There were opportunities to get in on pullbacks, but it never hurts to see these things early and keep these on your radar. You can see there already was a bit of a pullback to get in just in the last, first couple days of this week. So a little bit more about what they're up to. Net sales are up 12% year over year. They are tracking for that guidance of 1.2, 1.3 billion, whatever it was exactly. The net sales are up in that 700 million. And the gross merchandise volume, this is important to separate from net sales, about 900 million. So, there was some gross profit, but a net loss. Now, it's not super scary to see a net loss, but it's important to note if that thing does turn around, this company could become worth a lot more. So, it's kind of silly to look at price to sales. If you worried about price to sales for every company, you would value Palantir as a penny stock. Not actually, but you get what I'm saying. So here are some other comparisons. Amazon, of course, the massive one. Walmart, even Best Buy and Target. These are not really super interesting or investable right now, not only for the reason that they haven't been going up much. Best Buy is up 30% or more, but it's been pretty choppy. It hasn't been the smoothest ride. And then Target, these companies move 2% a day. Target has just been on a downtrend for a while. So Walmart has been doing all right and does have that Walmart Labs division, some of the most advanced warehouse automation robotics. And Amazon, of course, even though it isn't doing great, it's, does have a lot of potential. Some people saying those layoffs of 30,000 people is to put that money into AI and automation. And the thing that no one's saying out loud is that's more of a sure bet in terms of ROI than hiring people to work on, quote unquote, special projects that may or may not pan out. You might as well just put it on, building out more compute or acquiring more companies that can help with that, and then providing that compute to, AI unicorns that may crash and burn, but at least they're paying you for their token usage. So I do think it's important to, keep a temperature of these big, huge companies, keep a temperature of Amazon earnings tomorrow, but based on how this thing moves, completely different and not correlated with the market, which is the green overlay in the background, or gray, whatever you want to call it. This thing has a life of its own. It's a penny stock. So there's some liquidity here. There's probably, 60 million. So maybe you can put in 100th of that, 500K very safely. In like a 5-minute candle, just click one click of a button. So that's kind of the easy, simple way to think about that. Instead of like a block trade or anything where you have to sit and slowly get a position. That's a lot of liquidity. And as far as what made that big move up, as a rule of thumb, this insider purchase may or may not have, it's not always the insider purchases that, create these big moves, but it definitely doesn't hurt. And 12 million for a company this small is actually a lot, even though, generally you would not think that's that big a deal. But if we look back at the chart, August 13th, that's over here. It's actually way up here. It kind of is near, the euphoric part of this move anyway. So you have to be careful getting in near the end versus sort of on a pullback with these little penny stocks. So generally, when people are most excited about it, most euphoric, is right before the fall. And it's helpful to look at other companies, Amazon earnings, etc. But even more important for these companies that don't track the market is the dilution. So we can see there is some cash need, but in general, not a lot of dilution risk. And you can see that they have a bunch, enough cash for 6 months, so some cash need may be an understatement. I get that it's a startup-ish, a publicly traded startup at that, but still. So they did do an offering in July, raised some money, offered some shares to the public, and that was for about $30 million at $29 a share. So back in July, that's all the way down here, July, $29 a share. So that was enough money to make people excited about the stock. So if they do another offering sort of at price, which it seemed like that one was at the stock price, not an at the money, offering, at the market offering, at the money offering. If it's generally at the market price, that could also make people excited to buy that stock. Offerings are not always easy to read. Sometimes the price can be above and the stock still goes down. Maybe they sell shares into the offering. But in general, as I mentioned, they don't have a way to do that. So if you look here, they can do it, but it's not super likely that they're going to depress the share price a lot. As I'm saying that, I don't even know for sure why Dilution Tracker is saying this is called Dilution Tracker. It helps track dilution, selling shares into the market. It says offering ability low, but I don't always trust these lines. We can see here, especially, you just want to be careful. They can sell, it looks like, so it's registered in July 2025, $35 million they can sell into the market of shares. So that could definitely depress the share price. So you just have to be careful, set a close stop, and get out if this thing starts to go down. So it is a high risk, high reward opportunity, and it's important I label that as such. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to work with me, head over to stockscommunity.com. I will see you in the next video, or I will see you inside that Discord.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
Let's jump back into some Chris saying. I can see comments over on
So for example, if
YouTube
you have
as well.
$1,000, you need to only let yourself lose $200, because now you still got $800 left to take another trade. You're still staying afloat. You're still keeping your head above water. But if you make $1,000 and then you lose $1,200, now you're in the red. If you make $1,000 and then lose $200, you still profitable $800. Learning how to lose is the secret sauce to also becoming a 6-figure trader and a 7-figure trader, okay? But mastering these things, perfecting these things, and putting time in the seat is some of the nuggets you want to apply on your journey, okay?
TSM.
That's how you want to approach it every day, okay? Some time frames you want to trade are the 15-minute time frame, the 30-minute time frame, the 1-hour time frame, the 4-hour time frame, the 1-day time frame, or the daily. These are some of the better time frames to trade, but they also require you to have a level of discipline that comes with those, okay? These are just a few nuggets that I want to put on you and drop on you on your weekend journey, okay? Because I want to see you perfect the things we talked about,
We're watching this,
perfect the
Chris, saying
things
a
we
little
teach
late.
on a daily, but more importantly, go out and apply them on game day, which is Monday, Tuesday, Wednesday, Thursday, Friday, or any day the market is open, okay? So, guys, these are some of the nuggets that it takes to become a six-figure trader. These are some of the things that you want to do. You want to try to avoid smaller time frames because, listen to this before you go. Smaller time frames are fake out, breakout time frames. So like you get the trick, trap, and frustrate crew comes out on the 1 minute time frame and the 2 minute time frame. You might see a big green candle, you might jump in a call. Soon as you jump in, the market comes down. That's the trick, trap, and frustrate crew at play to try to trap you and trip you up. You want to avoid that. How do you avoid that? Use the 15-minute time frame. These are little nuggets that's going to help you in your game as early as Monday. But if you apply them throughout the year, you are going to be better day one than you are at day 365. Okay, that's just how the game go. Listen, man, coach just wanted to spend the morning with you guys. Hopefully this was helpful. Hopefully you find some gems in this. Watch this 2 or 3 times if you need to. Do me a favor before you go. Make sure you like, make sure you share. We're on a road to 1 million subscribers. This is not possible without each and every one of you guys, okay? Listen, everybody be in the Discord first thing in the morning. Everybody else consider joining the money team this week. We will get busy. That's without question, okay? With that being said, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stocks using my link below. And I'll catch you guys in the next one. Peace.
So, this news on TSMC came out today. TSM is the ticker. And if we look at Broadcom, AVGO, big move up. So, I think we've got that here. Some info on Broadcom. We're talking about OpenAI collaboration. We'll just open that up over here from Reuters. Okay. And we'll jump into a little breakdown here. Got any comments? Go ahead and drop those on YouTube. I don't know. I mean, they're connected to OpenAI. They're connected to NVIDIA. That has to be the play. And they're big dollar level. They're $300. So $303. See what NVIDIA chose them for. GPU chips. Okay. All right, we'll jump into a little breakdown here. This $303 stock has crazy potential. NVIDIA chose them for its GPU chips. NVIDIA is one of their largest customers to make these GPU chips. The ticker is TSM, Taiwan Semiconductor Manufacturing, TSMC is a company. And they just had news today as well that they're working with OpenAI and Broadcom to develop a chip for OpenAI. So they have very important, advanced, innovative, highly valued public and private companies, the most valuable in the world, as their customers. I think now is the time for TSM. So this is my idea of the best stock to buy right now. It's not financial advice, but if you like this, hit that like button.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So here is the connection to NVIDIA. TSM is NVIDIA's primary partner to make these GPUs. And they also do chips for training and inference. So inference is the kind of chip that makes decisions. So you have the chips that are used to get all the information, and then the chips that use all that information to give the answers. And it's important that they have NVIDIA as a customer for both, because some people say that there's more competition in this inference market. It's easier for new competitors to come into that market. So if that happens, whether it's a unicorn startup or what it is, TSM is still going to be all right because they're making these training chips as well. And here's the deal. They don't just have this NVIDIA connection as well. They have this OpenAI connection as of today, according to Reuters. They're working with Broadcom as well on this project. And you have to think that them having OpenAI as their big customer, AMD, is also in the mix, providing chips to OpenAI as well. But basically, this is cementing TSM in the sort of chip mafia that OpenAI seems to be the head of, along with NVIDIA. They're getting chips from a lot of different makers. And if TSM does end up making a chip that is extremely important for ChatGPT, OpenAI's chief product, the consumer product with almost 1 billion monthly users, it's absolutely grown like a weed, then this is going to be a big deal. So we'll see it happening in real time here over the next few weeks, few months. We're in the middle of earnings, but you have to think that this connection with OpenAI, where they're not only training, but they're also going to be needing inference chips to give us the answers when we type a query on ChatGPT. It's clear that TSM is right at the center of this. So here we go. The need for inference chips is going to be a real one. So look, we can look at kind of where the stock is, and we can look more into this deal and the connection. But here's the deal. Like, earnings have been mixed in this Q3. Q2 earnings weren't great. TSM going sideways was actually a pretty good earnings reaction. If we really zoom out, zoom out, we see a company that is just an absolute skyrocket. But if we look and even a 5-year, whoops, that's a little zoomed in. 20-day does look, does sort of show you though the risk levels. We're pretty close to this risk level that it's sort of dancing around, which is that, no surprise here, that's super psychologically visible $300 risk level. So for price levels, for people trying to get the best entry, that's pretty relevant. And then on a 1-year chart, as Thinkorswim shows here, this thing has tracked the market, except it's really more like tracked NVIDIA because it's up 120%. The market as a whole is only up, whatever it is, up 30% over the past 8 months or whatever, 6 months since those lows. So now you have to say NVIDIA is gonna release earnings at the end of the month. What stocks do you want to get in, or do you want to be in, or rotate into, wherever your portfolio is at right now, before that? Because look, maybe you predicted that this NVIDIA day was going to result in a massive move up, but I didn't predict that. I know some of the best traders in the world, investors in the world, it looks like there's some breakout potential here, but NVIDIA didn't break out here. So you never know how these sort of demo days are going to go. Sure, there was a ton of big announcements, but who would have known that Google would have had $100 billion of revenue and had a massive Q3 earnings move, whereas Microsoft, so far, we'll see if this rebounds, so far has a negative reaction, and Microsoft was supposed to be the one announcing all the good news. Microsoft had the brand new announcement where they're getting 27%, give or take a percent. I don't remember the exact number. It was over a quarter of OpenAI, which is supposed to be good to have them own an equity stake that big, as opposed to just having that 50 whatever percent, 49% of the revenue agreement. Microsoft put $1 billion into OpenAI. That billion is turning into over $100 billion, and yet the still reaction goes down. This is how hard predicting earnings reactions is. Meta, who would have thought, they have had a lot of positive comments about their AI recruitings, even though they're paying hundreds of millions for researchers and their, Facebook artificial intelligence. Their packages have been, some people don't think they're super fair. So I guess the researchers have been leaving, but they've definitely been very aggressive in AI. So to see this move down, it's actually on a tax-related $15 billion payment. But still, that was not predictable to the layman or the expert. And so there's 3 companies. We'll see what happens with Amazon tomorrow. We'll see what happens with Apple tomorrow. And then we'll see what happens with NVIDIA at the end of the month. But in the midst of all that turmoil, what are the companies that are investable? I think it's these semi companies that are still underpriced, in my opinion. And if we look at Broadcom, which is working with TSM, big move up already. They had a couple, they were well positioned. I mentioned them in the Discord this week, and it has been a good run for them over this all-time high. And I think TSM working with them is a good sign. I'm wrong a lot of the time, just like the best investors in the world. But what this gives you is a super clear price level, $300 to risk a few dollars and make $10 or more. So we'll see what happens. Qualcomm also having a PR about working with OpenAI. I won't open it up because these are just so detailed that it sort of loses the flow of this video. But you can see them move up here, and they have earnings coming out. You can't really, this is not viable right now, right before earnings. So I think TSM is the move. I do think the NVIDIA connection is a big deal, and that little OpenAI connection today is just the cherry on top. And this chip is expected in 2026 so far. We'll see what happens. But It's a big deal, okay? And as for essentially, what else the company is up to, well, here's their biggest client. Reportedly, Apple is a quarter of their or was a couple years ago. This is also as of a couple years ago, this NVIDIA revenue. But it's no surprise, these companies are all in bed with each other in the best way. And now we just have to decide which of these are the most investable at any moment. And I believe right now it's TSM. They did have a net profit for Q3 that was up 40% year over year, revenue up 30% year over year, and they raised this sort of guidance growth outlook as well. So it's all green flags, and I think it's at the best place to buy as well. So that's my idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to work with me, go to stockscommunity.com. I'll see you in the next one. Peace.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right. Well, let's check back in with Chris. A lot of Fed activity today. 25-point cut. Let's just play this.
What's up, YouTube? Listen, family, we back at it, man. I want to teach you guys and show you guys how to invest before the Fed rate cut, okay? Listen, we about to have a huge opportunity coming up this week. And if you're around here with Coach, I want you guys to be ready, okay? So listen, as always, I got a jam-packed video, so please keep it locked. Please make sure you like, subscribe. Make sure this video get at least 1,000 likes, and let's go ahead and dive into it. Today, class is in session. Everybody say, pay yourself first. Matter of fact, from this day forward, every Monday, unless something comes up, we are going to do what Coach do. I want to teach y'all my whole process of how I invest and build wealth. Okay, we leave that part. I get busy trading, but we leave the investing part out way too much. When we make the type of money we make as a family, this is what we do, okay? It's a few stock. Today, I want you to at least do one, okay? I want you to pay yourself, okay? Remember, I don't want you relying on no job. Does that make sense? So I want you to learn to pay yourself first. I pay myself every Monday and Friday, but y'all about to start emulate this, okay? I want you to do everything Coach do. If you don't pick these, do the same thing, the ones you want to choose, but I'm also picking ones for you that I know that's going to go inside of the moo. And we're going to do the 100K challenge out of here. I'm going to teach you. Matter of fact, I'm going to change your life. All right. But listen, let's get to it real quick. All right. Go here. I always got to get my crypto in. All right. So this is BMNR. I told you this was $30. It's going to $60. From $60, it's going to $100. Okay. Ethereum and Bitcoin, respectively, are going to go to 15,000. And Bitcoin is going to go to 150,000, 200K, and 300K. Mark these numbers down so that you guys know the opportunity before you. But I want you to do this. Let's look at this. We're going to go to trade. Okay. Now, do you guys see in the middle? Okay. You got regular trading hours, limit, go to price. Okay. Every Monday, we going to at least start buying $5. Okay. Can we shake that? Can we get our life right with at least $5? Okay. And so I want to get you guys in the habit of making sure that you are paying yourself first. All right. So let's go. Let's see if we can do this. We gonna confirm this. Boom. All right. Boom. Confirm. All right. They said the price deviated too much. Okay. Let's go back and see. We'll hit trade. Make sure your price can do that. All right. I'm just gonna do one contract right here. All right. I mean one share right here. All right. But listen, if your platform allows it, you can do a fractional share, which is $5. I don't want you feeling like you gotta do too much. Okay. Now watch this. Boom. We're gonna see if this one go through. Order submitted. Okay, that's good money. All right, now look. Next, pay yourself first. Everybody say pay yourself first in the comments for me. A play that's going to
All
go
right, so
crazy is
when are
NVIDIA.
CRDO
I
renewals?
want you guys to do the same thing.
December.
Watch this. Hit trade. We gonna go here. We want to get at least one contract. Okay, let me see. They had a number in here before this. I want to see if they allow what number that they allow. I'm just playing around with this real quick, guys, and just seeing what what do they allow to happen. Let's see. Let's see. Coach just playing around with this to see. Order submitted. Okay. So that was $5. Okay. Do you have $5? Yes or no? Let's do one more for the roll. Okay. Palantir. This play gonna go to $200. We got this at $20. I want to help you change it. Like this play gonna go to 220 to be specific, but I want you in it from here to 200. Again, pay yourself first, okay? So let's see, a minimum 001. Let's see if we can get this down. Let's see where that's at. Look at the where it say amount at, so you guys can see how much coach is paying. Okay, look at the very bottom. That's under quantity, so you guys can see this. Okay, do you have $5? Let me know. Boom. All right, so you paid yourself first.
All right, I'm feeling inspired, and I think CRDO is interesting for sure. Credo Technology Group. Okay. AI data center connectivity. They've got all the big companies as their customers: Microsoft, Amazon, Nvidia, AMD, Tesla, through Grok. I can see comments over on YouTube. Otherwise, we'll jump into a little breakdown in just a moment here. Let's see what we got cooking here. Baba ASML. Credo. $171. Bloom Energy is $132 now. Okay. Talk about an exciting earnings season. Not GM. How's Tesla holding up? Big recovery. All right. How much money do they make? A lot. Do they have dilution? Do not. Do not. Do not. Okay. That's probably enough info about this company. That's a lot. Hyper-focused on hyperscaler connectivity. What is that? I mean, we all get what it is, but not actually. The hyperscalers are these AI companies. Okay. Tesla, and why do they have Tesla as a client? For Rock? Why do they have NVIDIA as a client? Right, if they do the connectivity, NVIDIA pays them. And then NVIDIA provides a complete package to these Mag 7 companies. I love ChatGPT diagrams. They're so confusing. Okay. This is a $171 stock. If you have any comments, go ahead and drop those. Otherwise, it's time for a breakdown. These are the other companies, COHR Light. Lumen is an end user of their solution. They're very specialized. So Coherent, Momentum, and Lumen Technologies. Okay. Here we go. This $171 stock has crazy potential. They have NVIDIA and Tesla as clients. The ticker is, it's not COHR, Coherent. It's not Lumen, Lumn. It's not the other optical technology company, LITE. This is Credo Technology Group, CRDO, and they are hyper focused on high-speed connectivity for hyperscalers. The hyperscalers being the Mag 7, Meta, Microsoft, Apple, Amazon, Google, NVIDIA. So because they're hyper-focused, they're likely to have significant growth, and they're at an important price level, whereas these peers, the other optical connection stocks, have already gone up to a good degree, and Credo has not. So I think it's a good buying opportunity, and I think there's a huge potential given those connections, literally, to NVIDIA GPUs. It's not financial advice. Let's jump into a little breakdown.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So this is the stock chart. You can see this important level above 177, that high. And if we zoom out, we can see, sure, they've gone up a lot, 300% over the year, but recently they look like they want more, higher lows. And if you look at these companies that I just mentioned, Lumentum is unbuyable up here, not even because it has earnings coming up, but because it just went up 6 days in a row. LUMN, even closer to earnings. And then Coherent also extended and has earnings coming up. So I think not only is this one look the best on a chart basis, it also doesn't have earnings coming up for a full month plus. So its customers, the Mag 7, are just breaking out. This is confusing because they're all releasing earnings as we speak. Meta down, Microsoft down, Google up, Amazon tomorrow, Apple tomorrow, Tesla went down and then up. So you can look at an ETF like ARK, you can look at an ETF like Mag 7 for those specifically. But until you get NVIDIA earnings, you're not going to know how to play these bigger ETFs. And in the meantime, NVIDIA is near the end of earnings season. There's a stock that has earnings even later, and that is Credo. So I think now's the right time for this, similar to TSM in the sense that, earnings are not a factor. In TSM's case, it's already beyond earnings. And a lot of these companies have already sort of gone. Broadcom had that OpenAI news. Qualcomm, OpenAI chip news already went. Some of these other semi stocks, AMD had that OpenAI news, already went and then broke out. And Intel, with that government stake, broke out on earnings. So, if you can get in right after an earnings reaction or over a high volume level, in Intel's case, it's a little murky actually here, because the higher volume was on this day down, but generally you would say this is the level that you could get in over. If you're not looking to play these earnings, post-earnings moves, I think you have to be looking at companies that look like they are good regardless of earnings. So, I mean, when you have a big move up in September, like all the stocks did, and then a little move back, this was the case for a lot of stocks as well. Of course, this moved down from the tariffs. and rare earth scare, and now we're back up. So it's following the market, but it's also at a really important level where there's so many other companies that already broke out. Palantir is gone, Nvidia is gone. Hood is not really viable with earnings coming up, so I think it has to be Credo right now. Now, jump into a little more about this company. Essentially, this is what we got going on. NVIDIA is connected using Credo. That's probably a little simplistic, but I think it helps to know that they specialize in this interconnect technology. So there's not another company that has this specialization. And if we look at other companies that also have NVIDIA as a client, they also have other clients. So Credo has Tesla as a client as well for their Grok AI. They could ultimately use Grok for training that may be related to self-driving as well. But I don't think you even have to worry about that sort of intermingling. And you can just look at what are hyperscalers. The hyperscalers are the Mag 7 using CRDO4. Well, they're using it because these other companies are basically serving a variety of clients. So the companies I mentioned, Coherent, they do, optical components, but they're diversified. They have industrial medical laser applications as well. So you have to think that the one that focuses on data center optical connectivity is a pretty good play. Lumentum, similarly, they do optical transceivers, which is like God, I can't even remember from school what that is. We talked about transceivers, I swear. But you don't want these diversified plays. You want the one that's focused on hyperscalers. In my opinion, Lumen is a telecom company, not even a semi company. And I think you don't need a services company. You want an actual component manufacturer when they are supplying NVIDIA, right? It doesn't get better than that. So we can compare them. We can talk about, who's most likely to benefit from them. But at the end of the day, they're kind of at the center of it all. So let's look a little bit more at Credo in particular, and then try to figure out what the problem is going to be. This is 100% plus growth is crazy. So that may or may not, continue. And they also have very few customers, right? They only have the customers that NVIDIA basically has as well, the Metas, Amazons of the world. So I don't know if this is going to be a stock you want to own for 5 years. On a 20-year chart, this thing is in the stratosphere. On a 5-year chart, you can see there was a breakout over where the entire market broke out. NVIDIA chart, of course, looks really similar to this. But now the question is, what's investable, right? NVIDIA was investable here because it went sideways for a few months. CRDO, it didn't really do that for a few months. So I don't know if this is a company you just set and forget. I mean, this was as early as mid-September. So this is just over a month of sideways activity. And it's after a pretty big move up. So you do have to be a little bit careful here in terms of long-term investment. But I don't think MRVL actually looks, I think, okay. Yeah. But it's still, not as enticing to see a chart like this that shows some evidence of growth, but it more closely resembles a Ford than an NVIDIA in terms of chart history. So that's why this one just looks interesting. Stocks that go up, go up. It sounds pretty dumb, but that's just how it is. Now, as far as, recent news, anything like that, there hasn't really been anything incredibly exciting. I mean, there's some product updates, but that's not really my thing, because it doesn't always make its way into the share price. They've got agreements with the big names, TSM as well, and of course, you know, the garden variety, you know, big healthy gardens, but still analyst upgrades. So that's really all I got. They're at the center of this boom. They're really well positioned. They're literally connecting NVIDIA to all of these massive companies that need the GPUs, and they don't have their earnings for a bit. So there's no earnings overhang. So would it help to have Apple and Amazon blow out earnings tomorrow? You know, it would. Is it necessary for this company to go? I don't think so. So that's why I think it's a great idea right now. But I could be wrong. I'm wrong a lot. If you like these ideas, hit that like button. If you want more, hit that subscribe. And if you want to work with me, head over to stockscommunity.com. You can join for $25. See you in the next one.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right, let's see what else Chris Sane has got cooking here. Still working on loading videos.
First, too oftentimes we overcomplicate this game. Now listen, the whole goal for me and you is to show you it don't take all that. If you know you have more than $5, then you can pick them same 3 plays. All 3 will change your life, okay? I'm not worried about that. Coach, do this. What I'm worried about is you doing this. So when I give you the plays, whether free on YouTube or if you part of the money team or Discord, when you make the money, you put them here, okay? That's an ETF and 2 growth stocks. 1 crypto ETF and 2 growth stocks, okay? Individual stocks, all right? That's how I want you guys putting it down, okay? Now listen, we got the Fed this week. The cut is coming, okay? Listen to this. We are going to get volatility due to that. I want you guys to embrace it, be ready. I'm always coming to the game like this. I want y'all to cross your arms, say, what we doing? That's all you got to wake up and say, what we doing? Soon as he make the cut, the volatility going to come. The market going to go up and down. Your sole purpose, your sole job, get on the right side or whatever side of the trade you choose to trade. Let me know if that's understood, okay? That's how I want you guys putting it down, man. So good, you can be in Palantir. All of it's gonna go up and down. If you are okay with buying puts, Coach gonna do both. I already know how they come out. I'm seeing 100 rate cuts. So I already know it's gonna shoot up at first, then it's gonna crash down, then it's gonna get down, then it's gonna pop back up. I'm messing with at least 2 of the moves. I ain't trying to catch everything, but I'm at least playing 2 of the moves. You do what fits you, okay? It's totally fine because you're the CEO. So if you like calls, they gonna bring it down. You say, yep, Coach told me this was gonna happen. I'm already prepared, okay? This is gonna happen Wednesday, okay? And then boom, you just buy your call and you take off with it for me, okay? If it shoot right up and you know like, dang, I don't want to chase. I don't want you chasing. So then you just buy a put knowing that it's going to come back down, okay? Write this down. This is the next word. We are range bound. Range bound means they're going to purposely keep us within a range. No stock ain't about to go super, super crazy. They're going to all stay within a $10 to $20 range. Let me know if that makes sense. So they got their height set and they got their low set. How do we know this, Coach? So listen to this. This is the one thing that pre-market is good for. Whenever you guys are looking at...
Oof, pre-market gives me PTSD. All right, let's do a little breakdown on BE. If you guys have any comments, I can see those on YouTube. Any Trump connection? No. There we go. Fuel cell tax credit. It's an energy stock. It's not a drone stock. It is a power stock, actually. Okay. Here we go. When was the tax credit expansion? Senate bill. When was that? March. Okay. So is that track? March? B. That's not the right company. March. I don't know, man. That's not much of a jump. March of this year? March 13th. July 3rd. Well, I don't know. July 9th. So when did B spike on that? Let's see. Can we do that? Can ChatGPT do that? June 30th, July 2nd, July 9th. Yeah. Okay. Yeah, actually, well, arguably that led to this run. So what happened on July 24th? So what happened on July 24th? Okay. Collaboration with Oracle. Okay. And they're likely to output that power for NVIDIA, AMD, and Google, as well as Oracle. So, okie dokes. Here we go. Let's jump into a little breakdown here. I can see comments over on YouTube. Don't see anything right now, but I do see it when it gets commented. All right. Here we go. Fuel cell. Fuel tax credits for fuel cell technology. Okay. Jump into a breakdown here. Trump's power stocks will make you rich. That is perhaps hyperbole, perhaps reality. This is not financial advice, but there's one ticker, BE, Bloom Energy, that I believe is the best stock to buy right now. It is the only company that provides power that doesn't have to be transformed before it goes into servers for NVIDIA, Amazon, Google, the hyperscaler AI data machine learning companies, this is the only power load that directly outputs in a way that connects to those. So let's jump into what that means, what the chart looks like, what their previous spike when the bill for fuel cell tax credits was passed, what that was all about, and why this company is probably going to spike again, in my opinion.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So here is some deep learning here. Bloom Energy, they natively output this kind of power, and it's the standard for these AI servers, NVIDIA, AMD, and Google. That means AI data centers powered by Bloom fuel cells. So they benefited from the fuel cell tax credits passed by the Senate. This is the spike here in July. And then this spike was their Oracle collaboration. This is the company that can cut electric battery costs by a lot versus the ones we all know and love or don't love, right? So this is the near future. Sure, though, 5-10 year future, go buy Oklo, go. You can't buy Oklo right now. It's literally up here in the stratosphere. But with all the speculation money sort of coming down to earth, some of it never left. These are the other nuclear reactors, stocks that went sideways. Nuclear's not the move right now. Fuel cells have obviously had a lot of investor interest, but with this earnings, it provides sort of a fresh opportunity. So traditionally, I wouldn't say, buy a company that is up 500%, except, and this is why I started out with this info here, if it's the only option, if it's the best option, if it's native, if the people who actually do the work are going to say, hey, you got to use this, you got to use this. And it did have a big move up on the collaboration with Oracle. Oracle already chose them. So, if they can provide the best performance, I don't know if it's necessarily because they're so exactly like basically matched up for these servers or what, but that's what Oracle seems to say, is that this is the best company to power their data center jobs. So if you saw how much the stock went up after that, you would think, hey, if they can do this on an Oracle deal, Oracle isn't NVIDIA, Oracle isn't Google. I mean, Oracle's important, but just imagine what like an open AI deal could do to this. This was the Oracle announcement right here. And that was, maybe it was the Senate bill that sort of lit the spark, and then this, fanned the fire. But my gosh, this is a huge, huge run. So as I mentioned, traditionally wouldn't look at a stock this much up, except for the fact that it might be the only option for these hyperscaler companies, Amazon, Google, etc. And it has earnings. So earnings already happened. Earnings are out of the way. And they provide this high volume. There's some distributed buyers throughout here, where if it gets above here, they're all going to be making money. And then this thing can just explode to the upside. So we'll see what happens, obviously. But it has this risk level of 132. Okay, that would be the spot I would say is the most important. I would rarely look at this chart except to say when there's an after hour earnings, you kind of want to wait for it to close a full day. in my opinion. And, we'll see what happens with Google. Is Google going to give some back tomorrow? It could. Like, that's why I don't think it's a good idea to buy before earnings. Like, you might see this and, your buddy bought some calls here, options, and he made a bunch of money. It's like, okay, fine. But what if he also bought calls on Microsoft? What if he bought calls on Meta? What if he doesn't exercise these calls and Google comes down quite a bit tomorrow? I just think it's more smarter long term to let the candle close and then risk off of that level once it closes. So here's an example of that. Earnings happen, the candle closed, and once you risk a level like 66, sometimes these things just go up from there, and maybe you sell some after a little 5-10% spike. Maybe you are super mathematical and you say, every time there's a 2x average daily range of the past week or whatever this is, I sell half of my position. Great, you locked some in. Whatever works for you works for you. I think that this is an interesting spot technically, chart wise, and fundamentally with the information that we're looking at here. So let's jump into a little more about this company. Talked about the Oracle collaboration and the big run after that. Talked about basically the Senate bill, fuel cell credits that helped the stock spike. Did give some of that back, but as you saw, as we see, that could have been, the beginning of the run. So aside from that, there's also just, what did they actually do? We don't have to exactly look into the bill that already happened, but we can see that there is some connection to this bill. It is Trump's administration. He did, allow these tax credits to be on the table. And now we just have to say, is this company sort of worth buying regardless? So here is the theme: F-Cell, Plug, and these two that are sort of lesser known. Plug Power doesn't look super investable right now. It is at an important level, but would be great to not buy a falling knife, right? Maybe you're opportunistic and you do, but also good to let earnings happen. Maybe you're like a dancer and you get in and then you get out on a bounce and then you have a cushion going to earnings, but that's over my pay grade for this video. Now, the other company, F-Cell, sort of similar to Plug, but none of them look like Bloom, right? There's obviously some accumulation happening here. And with this earnings result, it definitely shows that there's still interest, even after that massive move up. Solar is also doing well as a sector. If you look at the TAN ETF, Solar ETF is just marching up. FSLR is probably the best looking one, although, I'm not one to say a channel is super easy to buy into. Sure, you might get lucky and it just keeps going up, but it's definitely more advantageous, in my opinion, to look for, sideways action and then you get in and then a stock goes up, like this Palantir example, or maybe an even cleaner example recently, besides the best one of all, which is this volatility sort of contracting here in Tesla that just goes up. But super recently, Nvidia is kind of like that, but it's just kind of messy, kind of similar to Tesla, but a little messier. Not every flag is as beautiful as how you draw them. Like this one, for example, it looks like it had a good move. It's continuing up. This is a biotech though, so you got to be really small position size, and occasionally there'll be some sort of dark pool print or whatever the heck this is that makes it so you don't get what's supposed to happen doesn't happen. But here's an example of like, yeah, so it looks like a beautiful flag, but we'll see what happens here, because what's happening right now is these flags are not all breaking out. So instead of looking for a perfect flag, I'm kind of falling back a little bit more on, hey, what does the company actually do? And value investor people are rolling their eyes right now. But it's like, yeah, you know what? I think that's a really good idea. You can't really just play momentum. So maybe Newegg works out. I am giving you guys some ideas like that because I know there's an appetite for that. But at the same time, maybe you want to risk a level and just say, hey, maybe I'm getting it at the beginning of a big run up. Maybe I'm not, but buying after earnings is kind of a way to do that. Here's an example after Netflix. You bought after earnings. Sure, it dropped down slightly, but you didn't have to risk much to have this thing just pull away from your average. And, suddenly you're up 20% or something. So that's the idea. Bloom Energy. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to work with me, head to stockscommunity.com. If you just want the videos faster, as soon as they're released, you can click that join button. That's another option. I don't know if there's demand for that or not, so I'm trying it out. Hope this helps. It's not financial advice.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
All right, what is Chris Singh got going on now?
After hour prices and pre-market, write this down. Okay, class is in session. Okay, guys, if you're looking at pre-market, it's called running a test. They're gonna go hit certain prices that they know they want to go try to test at the rate cut or on earnings, different stuff like that. So you have to kind of peep like, ooh, we up huge in after hours, or the market was up in pre-market, but then you ever notice that it might not come to that price all the time when the market opens? That's called running a test. They're coming back to it though. They trying to lure you to sleep, hoping you forget you saw that. Same thing is to the downside. Everything they do in one direction, they do in the opposite, okay? So with that being said, they're going to show you the lower levels, like on a red day. That don't mean it's going to come there that day. It's just showing you when we go down, we coming down to test these low levels. And you need to be like, oh, I peeped in pre-market. It was down there, but that market open, it blasted up. Okay, they're just making a little mark. They're just making a little mark so that they can, at some point in time, at a later date, come back and test that level. Know your levels, change your life for me, okay? So listen, we bought Palantir today. We bought NVIDIA today. We bought BMNR. I don't want you doing too much. Everybody I be all over the world, guys, and people be acting like investing is rocket science. I'm looking like I make millions doing this, guys. Keep it simple. Don't ever let nobody overcomplicate this, okay? When you get your bearings under you, when you get your affairs in order, you can do way more than $5. Let me know if that's understood. So listen to this. I had to get my feet wet. They didn't have fractional shares when Coach started. So years ago, back in the day, I was doing $250. That was always my number. $250. So $250. So I would pick stocks. Like, so for instance, Apple used to be 124. Okay. 250 got me 2 shares. Does that make sense? It got me 2 shares. And so I would just be consistent with doing that until my money went up, or till Apple went up to 192, and then it made me some money. Then I had more money to repeat that same process. When I make money with options, guys, I come back around and do the same thing, okay? So I want you guys to be prepared for the rate cut. I want to say major salute to everybody that made money today. But listen, be in the Discord first thing in the morning, because we're going to run it back. Listen, and be looking out for the bull traps and rug pulls. Okay, you got to know the seasonality period we're in. We can't just be falling asleep at the wheel. Okay, see profit, take profit, get in and get up out of there for me. All right, listen, man, we make videos like this every day. So if you like this one, Make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like, subscribe to the channel. Make sure you guys grab some free stocks using my link below. And I'll catch you guys in the next one. Peace.
All right. It is time for the next stock. Here we go. Alibaba. So they have NVIDIA. They're a large customer of NVIDIA. Here we go. When do they have earnings? They just had earnings? That ain't right. They're gonna have earnings. Should be a little breakdown. There is one stock that is about to skyrocket. In my opinion, the company is Alibaba, ticker symbol BABA. They are one of the largest customers of NVIDIA GPUs. They are a hyperscaler in the mix with Meta, Google. They are, of course, the Amazon of China. And now the question becomes, as an investor, is it worth investing in a Chinese company? Amazon earnings are tomorrow. I think this is a great opportunity. I think the China index looks good as well. We'll talk about that, and we'll look at charts for buy and sell, supply and demand. If you like these sort of ideas, hit that like. Let's get started.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So this is the chart. This is the earnings in a couple weeks. This is the buying activity in the past couple weeks. And this is the recovery on not just BABA, but the China index yin. Yin and yang is the bear version of that. So yin is recovered from that 2 Fridays ago significant drop on Trump and Xi miscommunicating about tariffs and rare earths. So Alibaba is the idea. Baidu is similarly interesting, although sort of curled up. Maybe not quite as interesting as it was a week ago, but it was also a little risky to buy as it, based a week ago. I think this one might be more interesting sort of over this left side peak here. This is a tough distribution candle to basically decide where these buyers and sellers are going to defend or, let the price go up. It's just about where the supply and demand is. So that's enough for the chart for now. Let's talk about what we're actually talking about here. This is the company. They are an AI and cloud company. I mean, that's only part of what they do, but I think it's important to state that they have a cloud business and revenue is up 25% year over year. They're going to invest $50 billion over the next 3 years into AI infrastructure. So this is no, small hyperscaler. This is very much in the mix with Meta, Google, Amazon, and they do have this stock that we're able to invest in. If you look at the yin index, you can see how it's kind of, if you look at a 1-day chart, gappy, right? This does not look like any of the other index. This is a biotech index. This is whatever this is, a finance or a healthcare index or oil. I get these all confused until I actually, this is healthcare. This index looks different, right? And that's because we're trading these companies that are like 12 or whatever it is, 16 hours, operating different from where we are in the US. So SPY looks like that. If you look at a 24-hour chart, everything's connected. There's no gaps. And that's the way I like to look at BABA too. But we have to be aware that they're going to move a little different as well. So that's like the trader way to look at it. The investor way to look at it is, this is China's hottest stock, right? And so if you're okay with investing in China, then why wouldn't you get in the one that has the biggest AI narrative and also looks super investable right now and doesn't have an earnings overhang? Like, if you bought Amazon right now, I would think you were crazy, right? Because they have earnings tomorrow, as does Apple. The question is there any risk to investing in these companies over the longer term? You know, generally I talk about ideas for like a couple weeks to a month, and then if they just keep going up, you just hold some of your position. I still think that's a good idea, but that strategy starts to have some holes in it when you don't know always how these companies are going to do. There's the Jack Ma situation. There's this sort of unspoken thing that, this isn't the US, so we don't know if they want large companies over there. There's a lot of different companies, including Alibaba, that have been fined for, maybe they would have had that same fine in the US or not, depending on the administration. But there was this IPO situation. And then there's also, of course, the TikTok divestment situation. Now, Alibaba is not, poisoning our youth like TikTok is, but it's still important to note that this is not the same as investing in, a little Amazon in the US. So keeping that in mind, it's always good to have in the back of your mind if this is some meaningful portion of your portfolio. As far as connections, they're collaborating with Microsoft, which is Microsoft 5 years ago or so was kind of left for dead in the technology startup, book club, right? Only after Azure started to take off their cloud service, you could do big AI workloads on them. And then OpenAI started due to Microsoft's involvement. So that really brought them back to the front of the conversation. So this is a big deal. And then these partnerships as well are obviously a big deal. Apple, their privacy push is probably not going to be super helpful for Alibaba, but they play well together indirectly, it sounds like. And then they do have this deal to have Alibaba help with Oracle. So it's a massive company. The 50 billion should be enough to basically show that. SoftBank also holding a significant stake in Alibaba is another green flag that makes this investable. They're, some of the most high-flying, risk-taking groups, investors. To be honest, I don't even know if SoftBank is a group of investors or, just this one guy, Masa. And then there's Stargate, as well, the $500 billion AI project that's allowing permitting to go through faster with the government's blessing, allowing all these power generation opportunities to be built out. And then, the nuclear plants have to actually be built somewhere in the next 5 years. So Masa is the founder and CEO. And SoftBank is publicly traded. This is what I'm talking about. Their fund, which includes sovereign wealth funds, are massive and sort of creates some of these huge investments. I guess there's no connection with Stargate. That would make sense because Stargate is connected to the government, the US government. So yeah, basically in the same conversation though, although not talked about, is how influential SoftBank is, and that's sort of providing a path of capital from China to the US. So this is Alibaba. That's the chart. I talked about a lot about the risk, talking about how it's somewhat safe as well. These are some other companies to look at. Baidu is a super important one, the Chinese Google. We can look at that chart, but it looks pretty similar. And then as far as other Chinese companies, I do like to look at basically FUTU and Tiger as well. So we'll see. There's risks, but there's always risks. So here's Baidu. We talked about that. And then Tiger, it's just kind of going sideways. Futu, kind of parabolic at this moment. So if it can create a base and then earnings is okay, doesn't completely ruin the chart, that's investable. Yin, though, is what you really need to watch because it pretty closely tracks. You can see Alibaba pretty closely tracked that yin, not just the tariff drop, but also sort of the move up to some extent. Notably with Baba, earnings are pretty well respected. This is sort of at a perfect moment, in the beginning of September, but this is what investors dream about. An earnings reaction that gives you an opportunity to get in and then just trail one of these lines, meaning you only sell when it goes below one of these lines. So is that necessarily going to happen? You're going to have 40% up if you wait until earnings and get in on the next candle. Maybe not. Is that going to happen on Google right now? Maybe not. Probably not, given that the market just went up, a couple weeks. But that's a great example. It certainly has happened in the past. Netflix being an example in Q2 right here. And then maybe one of the most famous examples in recent history that was absolutely crazy just in the past couple years is NVIDIA. So this is kind of what I'm talking about, right? Somewhere in here, you can see, it's not a ton, but 30% right there from an earnings reaction. So it's definitely, worth it, 25% looking at earnings season, but you also have to look at the market environment. And in my opinion right now, with the SPY, I'm not saying short the market in any sense. We're still in a bull market, but we just went up, gapped. I don't know that up here we're going to have the same sort of punch that we had for this 20% move after the tariff lows, which led to all these crazy moves, including NVIDIA as well as Netflix, where you get these 40% up after earnings. So we'll see what happens with Amazon and Apple tomorrow. But right now, that's why I'm talking about stocks that are a little less in the limelight because they look good regardless. And they don't have an earnings day that you have to bet on. So that's Baba. If you like these ideas, hit that like button. If you want to see more, just hit the subscribe. Just do it. It helps other people see the channel, helps grow. And if you want to work with me, head over to stockscommunity.com and I'll see you in the Discord tomorrow morning.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
See what else Chris Sane has got to say here.
What's up, YouTube? Listen, family, you guys know we back at it, man. Another day is in the books, which means we had another chance to get in our bag and do what we do. If you make money today, let me know down in the comments below. As always, guys, I got a jam-packed video for you guys, so please keep it locked. Please make sure you like, subscribe, help this video get at least 1,000 likes. So without further ado, let's go ahead and dive into it. Listen, man, I'm jumping right into it today. I got a few things cooking up for you guys, man, and I don't want you to miss the party, okay? I'm coming out the gate with Palantir, ticker symbol PLTR. Check this out, guys. It is sitting at 189 on the day. Okay, nice little day today. Okay, now check this out. I'm gonna go to the news and I'm just gonna read a couple headlines. NVIDIA, look at this. NVIDIA partners with Palantir, Uber, and more, easing AI bubble fears. That was one of the things, guys, that made Palantir pop today, you know what I'm saying, before coming back down a little bit. But when you're inside of Moomoo, you have all of this stuff at your fingertips in terms of the news, what's going on. And I told you, a lot of times, in addition to your fundamentals and your technicals, news is the other things that move the market. So if you are using this, man, make sure that you're taking advantage of this. Matter of fact, look at this. Overall, the Dow Jones was up today, 0.34%. It is sitting at 4,700. Okay, looking closer to 4,800. That's good. The NASDAQ was up today, green. 2,300, very close to 24,000, I should say. Okay, 47,000, 24,000. And then look at the S&P 500. Many analysts are saying that this is going to hit 7,000 by end of the year. Guys, it may very well do that this week. If depending how things go, with China and the U.S. and some other news coming down the pipe, you just never know. My point being, whether it happens this week or not is not what I'm concerned about. They had predictions that this market was only going to go to 6,400, and we're sitting at 6,800. Now they're saying 7,000. Whenever they get to talking like that, you have to know it's a self-fulfilling prophecy that Wall Street is making. So I want you guys to be in the market. You should always be in the market versus trying to be timing the market, sitting out, waiting on crashes and corrections before you jump in. Even if you get in the party late, look at the S&P 500 sitting at 6,800. Even from here to 7,000, guys, you're still going to do very, very well for yourself, okay? So this is Palantir. Do me a favor, guys. If you've been with me since $8, let me know down in the comments below. We have taken this from 8 to 180. Next stop, everybody make a note of this, is $200 on this, okay? When it get to 200, that's when coach going to even tell you that it's a little bit overstretched, okay? But I still think we got enough juice. We got enough juice in the system to get there, okay? Now check this out. Next we have, I got this one on deck for you guys, NVIDIA. Did coach not call? Number one, AMD and NVIDIA was our plays if you guys are on the 100K challenge for this year. I want to say major salute to everybody that walked it down with me. Okay. Now, I've hit that several times over just on plays alone, this play particular. But look at this, guys. Did I not tell you this is going to $200? This is currently sitting at $201. Ticker symbol is NVDA. You remember at the beginning of the year when this fell? You know what I'm saying? This fell, to 98. NVIDIA, AMD fell even lower. And look at this. My target for this is 230. Everybody put 230.
230. That is a lot, but I like it. All right. Let's talk ASML. This is the last ticker of the day. So if you have any comments, go ahead and pop those in on YouTube. Otherwise, we'll get going on a little breakdown. Like this live if you like it. And let's talk ASML. All right. There's one stock that is about to skyrocket. This company is ASML. I'm not going to hold you hostage. That's the ticker. And they make manufacturing equipment that allows you to very finely produce wafers for chips. and they're the only company that is able to do it so finely. So they allowed NVIDIA GPUs to be made. NVIDIA uses their equipment, and they're also located in the Netherlands. So they allow the US and the EU to restrict sales of their equipment to China, which is extremely of national security importance. I don't know exactly why the Netherlands, well, I don't know why the US and the EU have control over the Netherlands that way, but I think they're a pretty agreeable people. So the ticker is ASML, and let's jump into the chart for supply and demand and a little bit of recent news. This is not financial advice.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.
So this is the connection to the big dogs, right? AMD chips are fabricated using their machinery. NVIDIA chips, well, GPUs that use chips, are made using their equipment. And Apple uses, this is the special, billion-dollar acronym EUV. I don't know what it stands for, but that's apparently what they've got that no one else has got. So that's why Apple needs them. That's why NVIDIA needs them. That's why AMD needs them. And if you look at the chart, earnings are behind them, and the reaction's pretty good. And considering earnings reactions so far, I mean, there have been some reactions that have been relatively good. CRS comes to mind. GM. There's also been some reactions that have been not so good. LRN, for example. I mean, goodness gracious, FI. So I think Meta is kind of an anomaly in the Mag 7 due to that sort of tax hit that they responsibly took, I guess, this quarter. And we'll see Apple and Amazon tomorrow. Google with that crazy, awesome 100 billion revenue. So earnings season is kind of mixed, and that's different from Q2, where Google was actually one of the few that had a really solid reaction after Q2. If we look at some others, I can try to pull some up, but Apple, recovered, but initially not so hot. Meta Q2, one of the few that was good as well, kind of pulled back and then went sideways. And then, of course, if we really zoom out to the consumer companies, Spotify, not a great initial earnings reaction, and Netflix as well. These sort of are general indicators of the market as a whole, but Q3 earnings, Netflix, not good. But we're also having some positive reactions as well. So Google, Alphabet, whatever you want to call it, is basically the best one of the Mag 7. We do get Apple and Amazon tomorrow, but I do think that ASML is in the top. I mean, I've talked about 5 stocks so far just today that I think are great stocks to buy. So I'm looking at a lot of stocks, and I think these are the best. I do think that if you're going to look at these 5 stocks that I mentioned already Newegg, I mentioned CRDO today, I mentioned Alibaba today, I mentioned Bloom Energy today, and I mentioned TSM. The closest one to TSM is ASML. They actually, as we just talked about, their machinery is used by TSM to create Apple products. So it's not a surprise that the chart looks really similar to TSM. It's not a surprise it looks similar to, not SHM. Something similar to that. Not this robotics warehouse automation company, but whatever the semiconductor ETF is, it's looking solid. And we can see that in all the semiconductors. Intel, AMD as well. Even ARM is looking like it's going to break out at some point. You just kind of have to be careful of some of these earnings overhangs. So this is the company. That's a lot of market context we just sort of threw out there. And here is the connections to big companies, as well as why ASML is so investable. This is why. They're the only company in the world that produces these lithography systems at scale. Okay, so this is lithography is like how you put all the things on the chips without basically making the chips massive and unusably large. So I do think that we have to be careful still because we don't want to ignore. I mean, NVIDIA has earnings at the end of the month, but I think it's okay to look at some of these more established, like lower level companies instead of the, sexiest companies, right? So the IBM earnings reaction is an example of sort of a foundry type company, a manufacturing equipment type company that has had a huge earnings reaction so far. I mean, it looks pretty ugly initially, but came right back, similar to Tesla, ugly initially, came right back. So once you get over a key level, it gets pretty investable here. And as long as you're not talking about a biotech, these companies you can buy with pretty low risk, and they just sort of march up, even though they only move a few percent a day. So that is the selling point for these. And this is one, SMH. Did I not say SMH? What did I don't know what I said, but SMH, it's breaking out. It looks a lot like Mag 7. So I think this is super interesting. Yeah, I totally did SHM. And then if we look at Mag 7, it looks pretty similar as well. So you can't really buy these ETFs once they already break out, in my opinion, because then you start to get into sort of like a gold situation where it's like, okay, maybe, it forms another flag and breaks out. But at some point, they eventually come back to earth a little bit. So did talk about gold a couple weeks, week and a half ago, whenever I did, somewhere up in here. And initially I was wrong, right? It kept going up and then bam, it went down. So I'm wrong a lot, but sometimes when I mention a ticker like DUST or GLO, it is a good idea. So not here to toot my own horn because I'm terribly wrong. Here's a company that I mentioned last week. This is probably my worst stock idea ever. I said this was a good idea. I'm not going to talk about biotechs probably in the future because it's just too much risk. Because I don't know your guys' position sizes. This is not financial advice, and I make that clear, but still, the risk reward just might not be there. I mean, HIMS is another example where, you get caught in this and it's just a gap down on, this was actually not a phase trial. This was a legal situation. Well, not actually a full-blown legal situation, but sort of Novo Nordisk discovered that they, weren't representing their product in a way that they wanted to. I mean, but you don't want to jump in these slow-moving ones either. I mean, Novo Nordisk is just going down. Pfizer is moving, 1% a day. So it's a balance between risk-reward, but this is kind of a nice balance. These semi companies, because they're the underbelly of the AI trade. You don't have to totally pick the top on an NVIDIA and chase something that is kind of unpredictable. I mean, I thought it was going to break out here. A lot of people thought it was going to break out here, and then it took another couple of weeks. So I think ASML is setting up super well. Higher, days over this. Earnings are behind us. Talked about its competitive advantage. Talked about basically how it's connected to all these big companies. And then talked about how they're in this other country, which is, diplomatic enough, punching above its weight. So the US really likes working with them because if there is a China scare or whatever, this company is sort of not going to fall into China's arms. So that's the idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you are a stocks community member, from stockscommunity.com. I'll see you in the Discord tomorrow morning. Not financial advice. Good luck.
This is Sam Putnam.
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 This is Sam Putnam. This is Sam Putnam.